everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. Spot steel prices edged up this week, with domestic hot-rolled coil (HRC) prices rising by 30 yuan per ton from the previous week and rebar prices also increasing by 30 yuan per ton. On the macro front, US employment data came in weaker than expected, coupled with a CPI reading of 2.7% that fell short of forecasts, raising the probability of a Fed rate cut in January and fueling optimistic expectations for rate reductions in 2026. Domestically, the economy is in a period of macro policy vacuum, while calls for reserve requirement ratio (RR) and interest rate cuts have grown louder. The government has maintained strong policy resolve, with economic policies remaining stable on the whole. On the industrial side, weekly output of the 5 major steel products continued to decline, dropping by 82,500 tons, and pig iron output fell to 2.26 million tons per day. Among the 5 major steel products, HRC output saw the most significant decrease, falling by 168,000 tons week on week. Supply-side pressure has eased, with pig iron production shifting toward rebar and medium and heavy plate. Weekly rebar output rose by 29,000 tons this week, while medium and heavy plate output increased by 64,400 tons. At present, steel mills are facing mounting order pressure, and their willingness to conduct maintenance has gradually risen due to thin steel profit margins and shrinking orders. It is expected that production cuts will persist next week, accompanied by output adjustments across different steel grades. On the demand side, thanks to rising temperatures in some regions, the weekly decline in demand narrowed, decreasing by 40,400 tons compared with the previous week, with rebar demand increasing by 55,500 tons. The export quota system will take effect starting January 1st next year. Some steel mills have already obtained export licenses, and most traders are in the process of applying, but details remain to be seen. In the long run, this policy is unlikely to exert a substantial impact on overall demand, and its effects will be more concentrated on short-term market sentiment, which has also led to a wait-and-see attitude in the recent demand side. In terms of inventories, the destocking pace of the 5 major steel products picked up slightly from last week, with total inventories falling by 373,100 tons week on week. By product type, rebar inventories decreased by 269,600 tons, demonstrating strong resilience. Meanwhile, HRC mill inventories dropped by 63,700 tons this week as a result of production cuts, which has alleviated some pressure, though inventories remain relatively high. In summary, supply and demand for the 5 major steel products remained balanced this week, with demand and destocking pace staying stable, further easing overall inventory pressure. Moreover, the ongoing production cuts have improved market sentiment toward winter stocking. Currently, steel mill profit margins are at a relatively reasonable level, but there is limited room for further expansion in the short term, as higher profits would reignite pressure on winter stocking activities. As such, steel prices are underpinned by solid support, but face limited upside potential at present. Looking ahead, with continued production reductions and the possible rollout of macro policies by the end of the month, market willingness for winter stocking in the forward market will further strengthen, and domestic market sentiment may drive steel prices to trend upward moderately. In terms of specific products, rebar and billet prices will receive stronger support going forward, while the downside risk for HRC prices will gradually diminish amid production cuts. Institutions believe that inventory levels have eased, and the decline in output has provided support for steel prices. However, after the seasonal decline in demand, there is limited room for steel prices to rise. Additionally, as export quotas will take effect on January 1st, the sentiment impact on exports is negative in the short term. In summary, overall steel prices have support but limited upside potential. In summary, steel prices have been underpinned and are poised to trend upward recently. In terms of procurement varieties, rebar and billet will show relatively stronger performance. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.